Hello and welcome to the Global View on this Monday. I'm Andrew Gagan. Good to have you with us here at AusBiz as we get underway for a new week. Busy one ahead, certainly locally, with earnings results. But let's first check where we finished up on Friday. Benchmark of global stocks hitting a record to end last week, while stocks on Wall Street were mixed, with Treasury yields falling amid soft US data and a reprieve from the imposition of any further tariffs from President Trump. The Nasdaq closed at a record high to end the week around 2.5% higher. The S&P 500 was up 1.5% for the week, and the Dow climbed around 0.5%. Mega cap tech stocks Nvidia and Apple led the gainers on Friday, whereas Microsoft and Amazon slipped. Airbnb shares surged after the home sharing company posted higher quarterly revenue. Applied Materials fell heavily after the chip-making equipment maker forecast second quarter revenue below estimates. And DaVita dropped after the dialysis firm projected annual profit below estimates. And Warren Buffett's Berkshire Hathaway sold some of its shares in the company. And with nearly 3/4 of companies on the S&P 500 having reported earnings thus far, it's on track to have climbed more than 15% from the year earlier period, its strongest pace in 3 years. On the macro front, US retail sales in January fell 0.9% month on month, which was more than forecast, with core sales down 0.8%. Industrial production rose 0.5%, while overall factory output dipped 0.1% last month, weighed down by a sharp decline in motor vehicle output. Meanwhile, Federal Reserve member Laurie Logan has advocated caution, suggesting a lower inflation shouldn't necessarily prompt further rate cuts, saying even if we do get better data, and it does look like it's coming close to 2%, I think we should be cautious, because if the labour market and the overall economy is strong, even in that environment, it doesn't necessarily mean there's room to cut rates further. Well, US Treasury yields fell on Friday after the softer than expected economic data, keeping further monetary easing in frame for the Fed. A 10-year yield sliding 5.5 basis points to 4.46%, and the 2-year was down more than 5 basis points to 4.25%. And the US dollar index fell to a 9-week low, the Aussie trading at 63.5 US cents. And President Trump warned again on Friday that the BRICS nations could face tariffs from the US if they set up their own currency. Bitcoin is trading just below 97,000 US dollars. On the commodities front, generally weaker to end the week. Oil prices fell on the prospects of a peace deal between Russia and Ukraine that could ease global supply disruptions. Brent futures down around 1/3% at $74 a barrel. Copper tumbled around 2.5%. Iron ore slightly weaker at $107 US a tonne. And gold fell more than 1.5% to $2,883 an ounce. Well, let's get across what is moving global markets at the moment with a focus on New Zealand. Greg Smith joining us from Devon Funds. Greg, great to catch up with you again. Thanks for joining us. Let's begin with how you've opened there.
Yeah, morning, Andrew. Pleasure to be back again. We've had a positive open. The NZ 50 is over 13,000, so up 0.24% at the moment, 13,021. Yeah, obviously taking a little bit of impetus from the US, but hey, we're right into it's a big week for us as well, which we'll get to with the RBNZ, but yeah, we're right into the earnings season. We've had a number of results out this morning, and yeah, so it's generally been a positive reaction, particularly to A2, which is at a 14% move higher. We've also had some good data out in the economy recently, so our manufacturing sector that's moved out of contraction, and just this morning we've had a similar positive read for our services sector. So there's a bit of optimism in the air, Andrew, as we start the week over here.
Yeah, also getting underway with earnings too. What have you seen there? I guess the one that, well, on both sides, essentially the Tasman, A2 milk.
Yeah, that's right. So yeah, cracker result. They've lifted guidance, which always sort of sits pretty well for investors. But half year revenue is up 10%, 893 million. So driven by China, obviously it's their primary market. They are going into the US as well, but there still was some weakness coming through from the daigou sales. But IMF infant milk formula sales in the English label were up 13%, and China label was 2% higher. So overall, IMF sales up 7%. So that's set pretty well. Earnings, that's up 5%. They've lifted their outlook, as I mentioned, so they've gone from sort of mid to high single digits to low to mid double-digit percent growth, and that's what investors really sort of seized upon. And what we're seeing over here, Andrew, as well, is our currency has been quite weak. So that's certainly been a tailwind for our big exporters, which would certainly include A2 milk in that basket.
Elsewhere, the Gentailer Contact Energy, what have you seen there?
Yeah, so they report monthly, so there's less in the way of surprises there, but they've seen increased geothermal generation, sort of moving increasingly more towards renewables. Well, they're obviously very strong in renewables as it is, but they've brought Tahara online. A 12% increase in operating earnings, so the results pretty much in line. They do have those monthly results. The shares are down around about 1.2%. They're also looking to buy Manawa Energy as well, so they've got some costs associated with that. But they have, like A2, they've lifted earnings guidance. So for FY25, they've lifted it to $790 million Kiwi. That's from $770 million. So that's quite a good result as well. So yeah, the shares are down slightly as we speak.
All right, and Freightways.
Freightways is an interesting one. Actually, they operate on both sides of the Tasman, and sort of what they're saying is, yeah, the Kiwi market, obviously there's a bit of optimism around rate cuts. Doesn't look like they've sort of seen that come through, to the extent they perhaps would like, but they're quite optimistic about the future. They're very much more positive about Australia. But look, overall, first half revenues up 6.7%, earnings up 6.5%. Their lower volumes in their express segment, but they've seen pricing improvements and also some market share gains. So this is a cyclical business which is operating in a fairly tough environment, but has been performing well, taking market share. Pricing's also normalising as well. And over here, their main competitor is New Zealand Post or New Zealand Couriers, and that's historically been supported by the government. The government's saying that you've now got to be a lot more commercial. So that's if you look at sort of courier prices, they haven't really lifted here for 20 years by material, and they're now starting to do that. So Freightways is benefiting from that normalising of pricing. I mean, they've got a really good track record of delivering for their shareholders. Interestingly, they talked about seizing M&A opportunities in Australia, so stay tuned there.
Now, Greg, as you alluded to there, just in terms of forthcoming rate cuts, more to come, obviously. We would look to Wednesday, the RBNZ meeting. So what, another 50 basis points?
I think 50 basis points would be fair at this point. And as I talked about before, the key thing is that their main mandate is price stability, and inflation is at the lower end of that range. And then balanced against that, you've got an economy which is in recession, notwithstanding the data we've had on the manufacturing sector and the services sector. It's still pretty tough over here. Like, we're not growing at all. We've seen lots of sort of homeowners coming off onto much higher rates of interest. Consumers are very much in their shells. We've got unemployment that's going up. And basically, we've got a cash rate which needs to be probably around about 1.25% lower than it should be. If their neutral rate's at 3%, we're at 4.25 now. They have to go 50. They just simply have to go 50 on Wednesday. Arguably, they should go more. They should go 75. But maybe they'll sort of pay attention to some of those sort of green shoots starting to come through. But in the here and now, look, it really is quite tough. There's optimism about the future, but it's sort of a bit self-fulfilling because a lot of it is about the rate cuts that haven't actually happened yet. So if the RBNZ were to sort of like not follow through with those, that'd be quite a different situation.
Yeah, well, similar expectations, of course, on this side with the RBA meeting tomorrow and 25-point cut expected. Greg, is there perhaps a feeling that the RBNZ has had a policy error there just in terms of perhaps having raised rates too far?
Oh, I think so. There is sort of generally that feeling. They've displayed a historic tendency for this, Andrew, as well. They went a lot harder on the way up, particularly versus the RBA. So, and then the New Zealand economy is less diverse. We're not blessed with the same minerals. We've got, I suppose, what is going right for us at the moment is the dairy sector. That's and exporters from sort of the lower currency that's occurring. But they went really hard on the way up. And we've talked about before about the philosophical aspect of the boom bust economy over here, and you can't blame the central bank totally, but they were the second to move globally behind Norway. They went really hard. Our economy, basically the brakes slammed on it, went into reverse, and now they're sort of having to play a bit of catch up. So I remember they had a 2-month break as well, actually almost a 3-month break over our summer. So they're sort of looking to right the wrongs, I think. And we're just not, we're growing. We're in the worst recession in over 30 years, and I think that says something. So I think there's no sort of, I suppose they'd be a little bit, not quite embarrassed, but admitting they were wrong, I suppose, if they go more than 50. So I think that has to be the minimum, though.
And Greg, more globally this week, look, not a lot of data to consider, other obviously that the RBNZ, but clearly still a focus on those policies from Donald Trump, tariffs. And in fact, US markets are going to be closed tonight for a holiday.
Yeah, that's right. So we've got a little bit going on this week. Earnings, I suppose, the big ones that stand out are obviously on your side. BHP, the world's largest miner, and obviously then we've got Rio, but we've also got Walmart, the world's largest retailer. And it was interesting, wasn't it? Those retail sales numbers on Friday were quite soft. We've got some PPI numbers out later in the week as well. We've got the Fed minutes, but they're going to need to be placed in context because they predated, though, with CPI and the PPI last week, which both came in a little bit hotter than expected. But it seems like the dial's changing, doesn't it? We're moving towards rate, and this is probably what we said a few months ago, that the dial towards Fed rate cuts looks to be moving much more towards the end of the year. And although markets are pricing some in around June, July, and getting into sort of September, we might only see one rate cut this year. So that's I think the emerging view. And as you rightly point out, there's a lot of unknowns with respect to how Donald Trump's tariffs play out. I suppose investors have been encouraged by the fact they've been kicked down the road to 1st of April for a lot of what we're talking about. But how does that all manifest itself? I mean, the interesting one is he talks about it being a tax on foreign countries. It's paid by the importers, so it's like a fundamental point that seems to be missing. That will have an outcome on inflation, you would have to think. Certainly what we'll be watching there this week, and obviously a lot of interest in your rate decision tomorrow as well. It seems like markets are pricing in that first cut in 4 years, so that'll be interesting for the cross rate.
Well, indeed. Greg, enjoy your week. Thanks for joining us from Devon Funds.
You too, Andrew. Thanks very much.
Let's just take a quick look at where we're likely to open. Looking for a negative start to begin the week. In fact, SPI futures off around 0.6%. Stay with us. Nadine's going to take you through the opening in just a couple of minutes.